Well, for the time being, I think our next guest is already standing by, so let's go to him. Jigar Mistry joins us. Hi, Jigar. Good afternoon and good to see you. And first, Jigar, before you ask you about stocks, sectors and markets, what's the feedback you're getting from your investors? You'll had a smaller book that gradually has grown up in the last few years, and you'll have given fairly good returns as well. So what's the feedback that you'll have?
Good afternoon, Nigel. So I think the feedback was pretty consistent. I think we were sitting on some amount of cash, so we are getting inquiries as to whether they should deploy more or not. We have deployed about, I would say, 10% of the cash today that we were sitting on. Still waiting for some bit of more opportunities. The other set of feedback we are getting is from our own sort of the dealing desk. And they're telling us that today they're not hearing any institutional sale whatsoever, but rather NBFC-led sell, which leads me to believe that you might actually be looking at a leverage sort of play being unwound quite sharply. So I think that might continue for 2-3 more days. Hopefully, we'll be able to deploy all the cash that we are sitting on, and then maybe we can call for more.
So this cash that you've deployed today, Jigar, afternoon, can you tell us the stocks, the themes, where is it that valuations are attractive for you?
Hi, Rima. So see, I think we spoke about a month back or so. And if I take the data from sort of November 1 to 29th February, there are some 211. So in just 4 months, 213 or rather 14 companies have more than doubled. And if I look at the small and mid caps as a percentage of the total market cap in India, that's up closer to 18%. Right? The last time in December 17, it was 16%, which in the run-up to December 19 corrected to a little over 11%. And same, December 07, 10% went down to 8%. So every time you see the small and mid-cap indices roll up to a level not seen before, and obviously more number of companies coming, so that upward trajectory is something that needs to be expected. But then every time a 3-year rolling number hits sort of 35 to 50% mark, the next 2-year returns have always been negative. So as a fund level, we had sort of transitioned to a lot more larger caps. In April 23, we were almost 65% small cap. Today, that number is lesser than 35% for a multi-cap strategy like ours. Historically, we have been extremely large cap in the run-up to this. And then we are sort of buying a few of the small and mid caps, which we always wanted to buy. PVR is one of them. Blue Jet is another. So I think a few of those names in the pharma and spaces which are interesting to us in the small and mid cap space. But please do remember that this is coming from a very low allocation that we have had running into this.
Okay, all right. Jigar, just hold your thought before Surbi comes across to you. Well, we have got a bit of a bounce on the index. We went to 21,900 and we popped up close to 100 points from there. In a day like this, you have to be thankful for the small mercies if you're a bull. So good bounce is what you're seeing from the lows. And the Nifty Bank has popped up close to around 150 points. It has that weekly expiry that will play out as well. So let's see if it can hold on to this sort of a bounce. Surbi?
Well, let's see. I mean, it's come in. We still have just under half an hour to go before the day sort of closes out. But for what it's worth, there are some buyers over there. You know, by the way, I've been trying to speak to a lot of mutual fund sort of participants as well while we're on air. And more than 1, 2, 3 of them have been telling me that they're getting flows. Okay. Even mid-cap funds on a day like today are getting flows. So I think what one of our guests was saying earlier, that if anything, this kind of a complete shakedown perhaps instills more confidence and reminds people that if you want to do mid caps and small caps, maybe best to go through a professional fund manager. Maybe you're not best for the game, leave it to the professionals.
You know, Surbi, just on a lighter note, normally you look at various stop losses at, right? Do you know where's the stop loss?
Sorry?
You know where's the stop loss today?
Where's the stop loss?
3:30 p.m. That's the one that's going on.
We're still about a good 20 odd minutes away from that. But
it's been that sort of a day.
It really has been that sort of a day. It's been a
But it's trying to redeem
slide.
itself now by, bouncing back a bit.
Well, let's see next 20 minutes what happens. Jigar, hi. Good afternoon. What a session, right? What a day. Now, how are you looking at the space, right? And this is not something new. This story has repeated itself every couple of years. It's just that we didn't hear the story for the last year and a half. Actually, after COVID, I mean, it's been more or less a one-way party. Now, specifically small caps and mid caps, which are the areas that you would venture into where you do some sort of fact-finding? because now you're getting better prices?
Right, Surabhi. So, sort of good afternoon, first of all. But see, better prices for sure. But let's look at the ongoing argument clearly is that because the earnings growth is stronger for the small and mid caps, sort of they are trading at a valuation which is higher does make sense. But when I actually go ahead and check that story, like, so I have the 1 year rolling return data here with me. The market cap for large caps over the last 1 year was up 41%. The EPS growth has been 28%. So there's a 13% expansion in PE. If I look at that for small cap, the number is 71% market cap growth, 13% earnings growth. So 57% PE expansion. For micro caps, so below 500, companies number 501 onwards, the market cap growth is 88%. The earnings growth has been 1%. Right, so an 86% growth in PE expansions. This comes back to the point that you did mention that many of the investors, the new investors have come in after COVID. They think that all sort of dips are, buying opportunities. And whenever they have done that, started with COVID, then happened sort of, I think, Russia, Ukraine was 2022, and then 1,000 odd points on 2-3 occasions. And all of them have been bought into, and all of them have made the money a year down the line. So I think that has encouraged a lot of risk-taking behavior where many of these businesses have come to a level where from a bottom-up standpoint, we can't make a lot of sense on why we should be pricing these businesses at that valuation. So unless I think that gets reversed to a certain extent, we might not find a lot of value to go ahead.
All right, let's get straight to the point then, Jigar. What do you buy?
As I mentioned, see, we have deployed only about 10 or 15% of the cash that we are carrying. Yeah, so we have bought PVR, we have bought the businesses that we owned, Nigel, to be honest. So, as I said, 2-3 names that I did mention, those are the only ones. The pharma company Blue Jet is the one that we have been buying. Ramakrishna Forging has been another one that we will be buying eventually.
Thank you very much for joining in. Blue Jet, Ramakrishna Forging and PVR are some stocks on his buying list. We will slip into a very short break. On the other side, we'll get you a few BTST calls, maybe STBT calls from our technical experts. Stay tuned.